Malaysia's employment continued to trend up in the fourth quarter of 2021 as demand for labour surged, pushing the jobless rate to 4.3%, the lowest level since the Covid-19 pandemic hit this country. According to the Department of Statistics Malaysia, the unemployment rate declined 0.5% year-on-year from 4.8% in the fourth quarter of 2020, while the number of unemployed persons fell 8.7% to 694,000 from 760,700 a year ago. This was the first time unemployment eased to below 700,000 since the pandemic began. Chief Statistician Datuk Sri Dr. Muhammad Uzair Mahidin said the national labour market regained momentum in the fourth quarter of 2021 as more businesses operated with full employment capacity and longer operational hours, while the reopening of schools and easing of restrictions on interstate travel and social activities also helped. The number of people in the labour force rose 1.3% to 16.14 million, while the total number of jobs in the economic sector also picked up, registering a year-on-year growth of 0.9% to 8.53 million jobs. Although it remained lower than the pre-pandemic period, the number of jobs in the fourth quarter of 2021 was the highest during the health crisis. On an annual basis, the number of employed persons rose 3% to 15.4 million last year, exceeding the 15.07 million recorded pre-pandemic in 2019, though the number of unemployed persons also rose further by 4.3% to 741,400. The jobless rate rose 0.1 percentage point to 4.6%. Sime Darby Plantation, or SDP, saw its net profit more than triple to 468 million ringgit in the fourth quarter of FY21, compared with 149 million ringgit previously, driven by both upstream and downstream segments. Quarterly revenue jumped 52.51% to 5.55 billion ringgit. It declared a final dividend of 12.38 cents per share, more than double the 5.42 cent dividend paid in the previous year. For the full fiscal year, SDP hit record levels once again, with earnings surging 90.46% to 2.26 billion ringgit, while revenue grew 42.92% to 18.7 billion ringgit. Its Group MD Muhammad Helmi Othman Bashar said that although SDP closed FY21 with an outstanding set of results, the path ahead remains challenging. He is referring to the forced labour finding by the US Customs. Muhammad Helmi said the group is pushing ahead to address all the challenges and is looking forward to the completion of the independent assessment of its Malaysian operations. Another priority this year would be the mechanization, automation and digitalization of its plantation operations, as it looks to continue to address the current labour crunch. SDP expects its performance for FY22 to be satisfactory. At the close, its shares were down 0.2% at 4 ringgit 90 sen, giving it a market capitalisation of 33.89 billion ringgit. Plantation stocks were among the top gainers on the local bourse today as the asking price of crude palm oil or CPO futures topped 6,000 ringgit a tonne for the first time. Kuala Lumpur Kepong led the plantation rally, hitting an all-time high of 26 ringgit 70 sen before paring some gains to close at 26 ringgit 46 sen for a market value of 28.6 billion ringgit. Also on the top gainers list was United Plantations, which rose 4.02% to close at 15 ringgit. Batu Kawan, which was up 1.37% at 26 ringgit 56 sen. PPB Group, which settled 1.97% higher at 17 ringgit 58, and IOI Corp, up 6.47% to end the day at 4 ringgit 61. In a note today, Public Investment Bank said the palm oil industry witnessed an unprecedented supercycle, with CPO futures topping 6,000 ringgit a tonne yesterday for the first time. Analyst Chong Ho Leong Leong said the research house has turned bullish on the sector as it expects a strong earnings trajectory for the plantation companies. He believes CPO prices will remain strong in the first half of 2022 given the tight global vegetable oil supplies and also supply constraints for palm oil in Malaysia and Indonesia. The research house revised upwards its CPO price assumption from 3,500 ringgit per tonne to 4,300 ringgit per tonne for 2022 and 3,800 ringgit per tonne next year, and upgraded the sector to overweight. For mobile network operators or MNOs, Celcom Axiata, Digi Telecommunications, Maxis and U-Mobile have recommended that the government allow a dual wholesale network or DWN model. This model would be developed and operated by two consortiums involving the government, Digital National Berhad or DNB, and MNOs who are ready to invest. In a joint statement today, the companies said they have submitted their proposal for the establishment of DWN. They said this model is a feasible option that leverages MNO's capabilities, existing resources, including infrastructure, supply chain, and the experience of thousands of Malaysian technical talents. Without sharing details in the statement, they said the telecommunications industry has been in discussions with the government and has provided views and facts directly with regards to the matter, and will respectively wait for the decision from the government. The telcos also voiced their full support towards Putrajaya's agenda through the My Digital initiative and the development of the digital economy in Malaysia, where 5G networks are among the critical infrastructure. In a note on Monday, Kenanga Research said it sees downside earning risks for MNOs over the next 3 to 5 years if the government opts for a single wholesale network model. This is because MNOs may have to pay upfront wholesale costs to DNB, even if they are slow to monetize 5G services. Kenanga expects the government to announce its final decision on the model to be adopted in either February or March. Arca Engineering Malaysia manager Ahmad Hatta Kamaruzaman claimed trial at the KL Sessions Court today to a charge of giving false material information to the Companies Commission of Malaysia. Ahmad Hatta is alleged to have provided false information on oil and gas support services provider Arca Engineering, in which none of the members of the company were said to be holding shares as nominee or trustee when they knew that the information was false. The charge sheet said Ahmad Hatta is alleged to have done this when submitting an annual return form at the Commission's office in Kuala Lumpur in June 2017. He is charged under the Companies Act 2016. If found guilty, Ahmad Hatta could face a jail sentence of up to 10 years or a maximum fine of 3 million ringgit or both. The court set bail at 10,000 ringgit for Ahmad Hatta with one surety and fixed March 21, 2022 for the case to be mentioned. Arca Solutions Malaysia said it considers the charge groundless. It also said it remains committed to cooperating with local authorities in the countries where it operates.